Rick Santelli standing by at the CME in Chicago. Hey, Rick.
Hi, Joe. It's pretty exciting. I think employment cost index, first quarter number, up 0.9, close to expectations. Up 0.9 would equal the second quarter of 25 to find a higher cost index. Here, the first quarter of 24. Initial jobless claims hitting the wires at 189,000. 189,000. Wow, that is truly incredible. We're looking at levels truly that we probably haven't seen since the late 60s. This is very, very incredible. And continuing claims, 1,785,000. That would be the least going back to August of the summer of 24, actually April of 24. Now, let's get into it. Let's look at GDP. Our first look, first quarter GDP, up 2%. That's 0.3 light. 2% would be the lightest quarter, well, since last quarter, which was up 0.5. Now, if we look at the personal consumption number, 1.6, that's better than expected. That would be the best consumption, well, just since the last quarter when it was up 1.9. But do remember, we were looking for a number slightly below 1.5%. And if we look at the price index, less than expected, 3.6. We're looking for 3.9. It's sequentially lower than our last look at 3.7. And if we look at the core on a quarter-over-quarter basis, couple tenths hotter, expecting 4.1. We end up with 4.3. That's significantly higher than 2.7. 4.3 would be the warmest since the first quarter of 23 when it was 4.7. Now, let's get into the personal income and spending numbers. Income up 0.6, double expectations, and that would be the best level since the summer of 25, July to be specific. If we look at the spending side, equal to expectations, up 0.9. Pretty robust. Last month, a little bit more robust, from up 0.5% to up 0.6. How does up 0.9 compare? Well, you'd have to go to the last quarter of 24 when it was up 1%. And we are a consumption economy. That is pretty good news. Now, let's adjust it for inflation. Real spending up 0.2. That would equal October last year to find a better level. August of last year. On the price index, up 0.7 as expected, but significantly higher than 0.4 in the rearview mirror. Up 0.7. Well, that would be the highest since June of 22 when it was up 1%. PCE, let's look at the year-over-year numbers on PCE. Year-over-year would be up 3.5%, and we are looking for a number that was 3.5%, higher than 2.8. That would be the warmest since May of 23. If we look at core on a month-over-month basis, up 0.3 is expected, 1/10 lighter than our last look. And, drum roll please, core PCE year-over-year, the last number I have today, up 3.2 as expected, 0.2 hotter than the rearview mirror. Up 3.2 would define a hotter number. You're going back to November of 23. Let the market synthesize all this. Pre-numbers, we were hovering right around 389 in a 2-year. We're now at 390. That's down 5 basis points. We're at 439 on a 10. It's at 440, down 3 basis points with a double intraday top at 443. And, of course, the reason it dropped down and the reason there's green in equities is because oil started to dip. Joe and the gang, back to you.